So the first thing to discuss with candlesticks is momentum. Now, if you remember, in the previous section of this chapter, we spoke about market momentum, overall, how fast a market is moving in one direction or the other. So aside from actually using that overall market momentum to gauge trades, we can actually use individual candlesticks to see the momentum that is actually entering the market right here and now. So how do we actually gauge momentum inside of a candlestick, and what does it actually mean and what does it show? Well, momentum is best spotted when we see strong candles in one direction or the other, with little to no wicks. So wicks are these little sticks that we get, and then the body of the candle is the whole bit that, the full green or red or whatever color scheme you have section of the candle. So a strong momentum candle is something like this one, where we have a nice uninterrupted candle with little to no wick on either end of it. Okay, another example is this one here, where we have a nice candle with little to no wick on the end of it. Now, we get a lot of candles with strong momentum in either direction, so being able to read what's happening around the candle is also very important. So what I'm going to do in this video is just talk through momentum, and I'm going to show you a few examples of how you can actually get to use this momentum and how it's going to help you to take some good trades. So when we see a strong body on a candle, that is the first indication of strong momentum. For example, in this whole downside movement, we have strong selling pressure. Okay, the selling pressure only eases up when we hit this little consolidation phase here, and we begin to see, a little bit of a retracement. Now, the selling pressure then continues with this next strong momentum candle. Okay, and this one is an interesting one because it's going to show the follow-on and how we can actually read areas where momentum is slowing down. So, in a nutshell then, when we are looking at high momentum areas, when we are looking for strong market momentum, we want to see full-bodied candles like this with little to no wicks, right? These little black wicks on either side. Now, wicks are rejected prices. So when we see the market push down to there on the instance of this candle and then push back, that means that within this 4-hour period, this price was rejected, okay? So this isn't too much. This is good. But if we were to look at, for example, the other one that we just outlined, where we have this large wick, okay, so we push down initially very strong, but then we have this large wick. Now this here shows us that the momentum is actually slowing down. Now, why is that? Because we tried to push all the way back down to there, and then we actually rejected all of this price, okay? So while the market then continues down a little bit, that is the first indication that momentum is lacking. Now, we don't actually see that in any of these candles, do we? Okay, and the market continues to ride down nicely. So that is essentially how we gauge momentum. We want to see strong-bodied candles with the smallest possible wicks either side. Now, that's going to show us uninterrupted downside or uninterrupted upside movement. When we begin seeing these larger wicks, a quarter of the candle is wick or a third or more, that is showing us that the momentum is lacking. Okay, and that is when we can actually gauge maybe it's time to take some profits. Maybe it's time for the trend to die out. So momentum is high when we have full-bodied strong candles. Momentum is low when we have a lot of sideways movement in the market and a lot of these active wicks. That is essentially showing indecision and lack of direction in the market. So, of course, we want to trade with momentum because that's going to bring us the fastest, biggest, and most accurate profits. We want to be on the side of the momentum. Say, if the institutional players are buying into the market, well, we know the market's going to go up. So we want to be on the right side with them. So how do we actually make sure that we are? The way to do this is to look for areas of clear consolidation, okay, like the accumulation and distribution we've spoken about, and identify strong momentum candles pushing out of the ranges. So what I mean by this is, for example, if we look at this region up here in the highs, we are going to see the market topped out and formed essentially this consolidation area just here. Okay, so we traded above, came back into the boundaries, and then this really is the area of consolidation when we have all of these sideways candles. Now, to actually trade then with the momentum and to use the momentum to our advantage, we can actually see, right now we know we're consolidating. There's no direction in the market. If we see a strong bullish candle pushing out of this zone or a strong bearish candle pushing out of this zone with little to no wick, that is probably going to confirm then the next movement in the market. Now you can see we do have that strong bearish candle. What does this do? It pushes beneath with quite a lot of strength, little to no wick, and it actually, something we're going to talk about very soon if you don't know what it is, engulfs the previous candles. So what this shows is the market started here in this 4-hour time period and closed all the way down here. So it actually lost 1, 2, 3, 4 previous candles of price action, all within this previous one. And we even closed beneath this one as well. So essentially what this candle shows is that every single one of these candles, 1, 2, 3, 4, 5, 6, have just been invalidated. And the price is now trading lower than back here when we didn't even reach these areas. So this strong momentum candle, which pushes beneath all of these other candles, shows us that the sellers are prominent in the market and the market is likely to go down. And now entering out of the consolidation like this, where we get a strong momentum candle out of a consolidation, entering there is where we're really going to get the best trade opportunities because we get to follow the momentum down, or on the flip side, follow the momentum up. So for example, this whole consolidation area here where we see this strong momentum candle push out, we then get an opportunity to actually buy and follow this momentum up. Okay. So another great example we've got visible here, this whole big indecision consolidation area in the bottom where we get consolidation, 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 and then a big strong bullish candle which pushes so much higher than all of these previous closures. Now, what does that show us? That shows us that buyers have picked up their orders in this region. And that's actually going to then drive the market higher and actually enter us into a phase of uptrending movement, markup, and actually provide us a buying opportunity. So that's how we can use momentum to our advantage. Now, it's worth noting that momentum, we are going to get strong candles in both directions, and sometimes they're not going to work out. Now, you can see even an example here where we have this consolidation phase. Strong momentum candle pushes out, but if you sold there, you're not really going to get anywhere, are you? Okay, you might get a break-even trade where we just roll back over and come back up. You might even take a loss, if you sold with a stop over here. So that is why we can't just use this momentum. We have to actually focus on all the other aspects we've spoken about, like all the market flow aspects, and also begin incorporating some of these other candlestick patterns and candle motions that I'm about to talk about in this chapter of the course. So momentum can be your friend. Momentum can be very useful. We, of course, want to trade with the momentum, but you do have to actually use some other factors to actually, tell you, right, is this market ready to go up? Is it ready to go down? Or is this simply an individual candle that's playing tricks on me? So if we look at an example here, I will show you where you can actually use momentum in line with other confluences to find a good opportunity. Right, I'm going to box off this area and run you through what we're seeing here. So this region from here down to here provides us with a nice trading example using momentum in line with the other things we've spoken about. So if you see here, we are downtrending, lower lows, lower highs. Let's just mark out a few of those lower highs. Okay, so we've got one there. We've got one here. And then that is really the lowest one. Then we have our low of the whole trend right in there. Okay, so at this point, we don't know whether or not the market is going to go higher or continue lower. What we could expect is potentially a rollover from here to form this new lower high. Okay, and then if we actually see the market push through, what does this give us? A change in trend structure. Okay, so we've come down, we form these lower low, lower high, lower low, lower high, lower low, higher high, where we've taken out 1, 2 previous highs. So we can see, okay, this could be a potential shift in trend direction. Now, can we see the formation of a higher low? Well, what comes through right here is the formation of a higher low. We've seen this previous high point has now been broken, showing strength, and we're retesting it as a new higher low in the market over these lower lows. Okay. So that is the first real trend reversal point. Now, this is where momentum can come in to provide us with great confirmation to enter the trade, right? We have all of the backdrop around it. We know, okay, the market has gone from a downtrend into an uptrend here. The market structure is now forming a higher highs and higher lows instead of lower lows and lower highs. And we could have a good opportunity on our hands. However, we need to see if the market momentum is going to give us the strength to go higher. So looking at this next 4-hour candle, that there is a nice momentum candle. Now, what did we speak about? Strong bodied candle, little to no wicks, especially no upside wick, which is of course great. Shows us that there is no rejections to the downside. Shows us that the market is now ready to pump up. And what do we see? It closed over the previous high closures of the market. So this could then form a buying opportunity to go into the market. Okay, respecting that lower high, and of course, looking somewhere to the upside for our target. So as a nice example, using the momentum brought out of this candle, we could buy into the market and bam, you can see we chase right there. We just entered into the momentum because what did we get? We got that consolidation we spoke about, taken out with a strong momentum candle, strong body, little to no wicks, taking us above the previous closures, showing that, okay, well, the prices were rejected here, they're now actually not rejected anymore. And focusing on all of the other confluences, of course, the market structure, changing direction, is really how we're going to get accuracy with these, okay? We don't simply want to sell a strong full-bodied downside candle, because if, for example, this one here, if we sold that, we'd have got burned bad. We don't want to just buy strong momentum bullish candles. We want to use them as a confirmation to enter trades when we actually have all of the other confluences lining up in our favor. So this is where the candlesticks come in. We use the market flow to identify the overall movements of the market, and then the candlesticks, the individual candlesticks that we're talking about in this chapter, in this section, are going to be those trigger points for our trades, showing us, okay, where are the buyers picking up strength? Where are the sellers picking up strength? Where can we actually dive into the market to get the best results and to make the most money and to get the best accuracy on our trading setups? So that is all for this momentum video. That is essentially how we want to use them in line with everything else to gauge areas where the market is switching direction and building up strength in one direction or the other. So I hope that this has been useful. Thank you for watching, and I'll see you over in the next video when we're going to go a little bit deeper into this momentum. And we talked about the candlestick wicks, these sticks that we get off the candles. We're going to talk about these in depth, what they show, and how we can use these to our advantage in trading scenarios. So I'll see you over there.